professionalinvestor.com's daily brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome to Monday's Frivolity. It's about a little past 9 o'clock on the West Coast. Not so wet these days, though, that's for sure. 7th of August, so marching our way through the month of August now. And I suppose this is what they call the dog days of summer. Usually later August. I suppose people back east are just dying 1,000 deaths with all the heat. I gotta blame that Allen guy and all his electric cars causing all this global warming stuff. Bastard. Although I did hear that he chickened out of his big I'm a bigger man than you are thing with the Zuckerberg guy. I don't know. Anyway, I was actually a bit surprised to see, and I suppose it kind of makes sense. The darlings of the market recently. I was interested to see that Mr. Tesla's short idea after that nasty weekly key reversal is still working away. I don't think there's anything new to report there. Interesting also too to see how Apple is continuing its way lower. Some of the other tech darlings that we've been watching, of course, Amazon had a pretty good showing late last week on a pretty stellar earnings number. And some of the semiconductor names that are pretty popular these days, NVIDIA hasn't really broken down yet. And I've actually made the argument that probably the market will actually have finished its correction the day that NVIDIA actually breaks. And of course, everybody in the public says, oh, NVIDIA broke. Oh, it's a new bear market, blah, blah, blah. Right. And ironically enough, that actually is the end of the down move. So anyway, only time will tell, as they say. So where do we begin the adventure today with you good people? Probably not off of that screen. Breadth slowly working its way lower. And actually I did hunt a short setup on the Dow first thing this morning and was stopped out of there just about 20 minutes ago. Small loss, not the end of the world. Kind of looking for some sort of like it kind of looked like we were digging a dead cat bounce right out of the gate first thing into resistance, and then the commodities themselves actually getting really hit hard here. Yeah, it felt like the stocks were going to roll over, but they firmed up nicely here. And I gotta say, our beloved corn, I guess, I don't know whether it'd be interesting if we could somehow sort of get like a tone of Brian's message out of the video yesterday. I think I was fairly worried about crypto. And it's interesting because we're also running this algorithm trading model at the same time. And it's got me buying and selling and buying and selling and buying and selling as it just flips back and forth. I think we're still stuck in a trading range. Unfortunately, trading ranges, usually algos do get shoot up a bit, but you can see crypto looks very, very heavy here. Oh, it was also, some of the news headlines that we reported on yesterday. I was reading more about how I guess Justin Sun is a principal of Huobi. I guess maybe that makes sense, wondering where he got all his money. So did see lots of talk and also talk about like actually Huobi people, executives, employees, I'm not quite sure which, were arrested. Now, of course, over in China, you can get arrested for looking at somebody the wrong way. So I don't know how much weight that carries. But I guess you could make the argument, tech in the NASDAQ, and of course, we spent lots of time talking about the QQQs yesterday, looking heavy M tops, that kind of thing. Of course, what's the market Brian wants to short? He tries to short the Dow, which is the strongest out of all of these. That's kind of stupid. But anyway, I got stopped out, I think it was a $20 loss on a micro. It wasn't really that big of a deal. So it looks to me like the tech space, whether you look at it from NASDAQ perspective, whether you look at it from crypto's perspective, and even also too, you can see the Russell 2000 small cap stocks not overly happy here today. And ironically enough, the one part of the market that's relatively happy is the blue chips, old economy, brick and mortar, or whatever you want to call it. So go figure. As I said there a few minutes ago, I was actually pretty surprised to see the overt weakness in the commodities markets. They really are taking it on the chin here. And even things like, we were kind of watching. Actually, I bought this stock. I have to seriously think about getting the hell out of here and just preserving capital because that trade idea didn't work. But I was watching recently soybeans off 38 ticks here this morning at $50 a point. That's some money, no doubt about it. So it doesn't matter whether it's gold, oil, silver, soybeans. Commodities are kind of taking it on the chin here today. A little bit scatterbrained here. It being Monday, I'm a little sort of wondering what we should talk about here today. So actually, here let's go back to basics and just start from where I'm supposed to start from. So, demonstrating your best practices. First thing this morning, get up and sort of what's my day. I had a very late meeting with the TRI team, and also too, it's another one of these silly Hallmark holidays here in Canada. So it's basically dead quiet out there where I am here in Vancouver. Monday, computers were doing well. Diet, exercise, okay. And as I said, I didn't really get the best sleep last night. So give myself permission to take it very slowly, take it very light. I did have what I thought was a pretty good looking little short setup there in the Dow futures, but it didn't work, and that's a trader's life, I suppose. Looking at the econs themselves and the general sentiment starting our day, we actually had Asia up a bit. I like to follow Japan as sort of my Asia proxy. Europe down a bit, and the headlines out of Germany industrial output falls more than expected. I think market generally was expecting the U.S. stock market to rebound. We are still technically in earnings season. Some of the bigger sort of bluer chips names are reporting, and their numbers were relatively attractive. And as I said, tech and some of the darlings of late, I think they're doing normal corrections because they just probably went a little too far too fast. Bond prices still working their way lower, and I was reading over the weekend that the consensus is just get used to the fact that debt for these Western nations, because they're just up to their ears in it, and the prospects of them actually cleaning up their balance sheets and making them more solid actually is pretty poor right now. So the consensus is just get used to downgrades, which of course means lower bond prices, which means higher yields. That's just we are now, and it's fascinating, right? Because these cycles move in like 40-year durations. We started this move lower in interest rates in 1982, and how ironic, in basically 2022 we have started probably a 40-year now rise in interest rates. Well, welcome to the new century. And the irony of it all is it probably has very little to do with the actual commodities themselves. I wouldn't even be surprised if commodity prices actually have to sort of work their way lower here now a bit. We'll see. Did see a lot of sort of talk though about how this high oil price is going to hurt the consumer's pocketbook. I can see it at the gas station. I don't know where you live in the world, but you're probably seeing higher gasoline prices. And also too, as long as these commodity prices stay strong, it probably worries the Fed to a certain degree, and they can't lower rates in the face of that. So, if anything, we all want to collectively cheer for falling commodity prices, so we can maybe get a little bit of. We're probably never going to be allowed to enjoy falling prices anymore. Thanks 1%, banksters, Joey Diamond, all that. But maybe we can get a little bit of disinflation where things just sort of calm down a bit for a while for us. Anyway. So nothing earth-shattering coming across the wires here first thing this morning. And it also being a Monday, so Monday should probably take things pretty quiet. Usually there's not a lot of econs that come out on Mondays. You can see we had Fed speakers here this morning, but to all intents and purposes, today's a non-news event day. So in a weird sort of way, in this kind of environment, they can actually do things like maybe clean up short-term oversold conditions in the stock market because it took a pretty big drubbing there last Friday. This is what they would call a dead cat bounce day. So that's your backdrop. If I understand correctly, we have quite a few pretty important econs coming down the pike. Chinese inflation data coming out tomorrow night. That'll be interesting to see. I don't know whether, and I don't know how many. Liam's doing good. Thank you for asking, David. Actually, the one bright spot in my life right now seems that car that I bought for Liam and the fact that he really, really likes my consistency and my dependability and my reliability. And this is his little escape. He gets 2 days a week for 4 or 5 hours. In fact, actually, yesterday we went and drove up into the mountains. It was quite nice up to Squamish. And he really enjoyed himself. So thank you for asking. And I appreciate the sentiment. Back to our story here. I don't know whether you guys have seen what's happening in China these days, but if I understand correctly, and the problem is that because of media censorship and lack of freedom of speech, you really don't really know what the hell's going on over there, whether it's all just a bunch of propaganda or just phony balonies. But one video I saw in particular, here is downtown Beijing. Oh my goodness. So I'm not quite sure what the heck's going on over there. But add insult to injury, I mean, their economy is already on the outs. If they're dealing with massive floods, well, that's going to be a problem. As well, too, there was a site member who was telling us that he lives, I think, in I can't remember what country I think it is. I think it's one of the Eastern European countries. Just sort of a side note, just be prepared. He basically told me that basically his whole village just got wiped out in Slovenia. And he asked whether it would be okay if he could post like a GoFundMe kind of thing to try and help the local citizens if anybody has a couple bucks to help them. They got really slammed here recently. So I said that was okay. So TRIers, if you happen to see Joji's post in the lounge, don't get upset at him. I gave him sort of the green light. And people in trying times these days, if you can help them out at all, I'm sure good karma begets good karma, as they say. Okay, so back to our story. Inflation data coming out of China, and I wouldn't even be surprised if you actually get some deflationary prints. The question here, of course, is it going to actually be the truth or some phony baloney made up number, which I think is par for the course for the Chinese. So anyway. Later on in the week, and this is probably what everybody's going to be concentrating on, is what are these sort of headline inflation numbers going to be. So that's on Thursday, August 10th. I might even argue that you could potentially just have a whole bunch of backfilling through today and tomorrow and even Wednesday as the market gets ready for these inflation numbers. So be aware of that. Also, too, we have later on in the week on Friday the producer price index. So That's sort of a inflation number from the manufacturing side. So do have a couple of key data points coming out later on in the week, and I get the impression that today's almost just like a backfilling day, as I said there a moment ago. Looking at the markets, I like to follow foreign markets in particular. And actually, it's kind of funny that I was hunting a trade setup on the Dow because the S&Ps didn't really have the best trade location. For some reason, I just had a feeling, at least, it's just my thought that we did have a half decent trade location on the Dow. I suppose we'll get to that in a moment. Here's the gold market. As we said, came off first thing this morning, rallied back their settlement, and has been generally kind of heavy all day. We've got a double top breakdown working, so I suppose you could probably paint Foggenbaums. And as I said, if we have commodity weakness across the board, in fact, actually even have a bit of Bitcoin weakness here. But if we have commodity weakness in things like food prices, and you can probably also see it in other commodities. A lot of the currencies seem to be a bit red here today as well against the US dollar. Bonds are red. Stocks relatively healthy. So metals, as we said, you can see the metals kind of getting beaten up here today. Silver, of course, very dangerous market. Silver is super, super volatile. Here are those grain markets. Interesting how the wheat market rebounded, but if I understand correctly, I think the wheat market actually got punched out pretty hard. There was my Dow short. Anyway. But if I'm not mistaken, I think the wheat market got hit pretty hard there Friday. Where is the wheat? Ooh, must have gone right by it. Come on. There we go. Well, actually, it's not bad. Nice double bottom. This is the 4-hour chart. A little bit sketchy. Left a pretty big gap there. So, at some point down the road, we should come back and fill that in. But it looks like we could pop up a bit more here today. So the wheat market's relatively happy, and I suppose that's on all the Russian stuff. Interesting how the hard red winter wheat, which is out of Kansas City, notice actually it did break to new lows there on Friday. So it is up a chunk, but not nearly as pretty a structure as the regular Chicago wheat there. I don't really like a gap like that, and I suppose that's all a function of what's going on in Eastern Europe and Ukraine and all that. Okay, so back to our story. Commodity prices, weak. Looks like crypto's a bit weak. Tech's a bit weak. The only place that seems to be shining, of course, is the blue chip Dow stock. Commodity currencies also kind of looking a bit on the weak side. Maybe a little bit of a pop up here. Let's see if some W's come in. Japanese yen even looking weak. And I actually did hear some people starting to talk about the euro is looking a little bit soft here. I suppose that's following the big US dollar rally here recently. So it's Monday. Probably just let the market open up and breathe a bit. Some of these stocks that got absolutely bitch slapped last week probably could use a little bit of backfilling. I think a lot of these other ones, especially like AMD, he's kind of just floating around in no man's land. I might even argue NVIDIA is as well too. And actually, this will probably be an interesting tell for the market here. How does Amazon handle? You can see it sort of looked into the gap here first thing this morning, and it said, you know what? I don't really feel like heading back down and filling in that gap. I suppose if we get rid of the after hours trading, you can see that. So boom. All right. So it looked into the gap, and usually the rule is if we head into the gap, we should probably fill the gap in at some point. So it looked into the gap, and everything was pointing down. Remember I was thinking short there on the Dow, and then all of a sudden we actually carved out not a bad looking bottom here. I think if anything, I'd probably even say that the market just ran out of sellers here. Just nobody's really that interested in getting too aggressively short. So, I think you have your line in the sand. If you want to just put an alert on your screen, if you see Amazon back below, what does that say? 138.95, then you'll know that the bear's back driving the bus here. Until that happens, I think we're probably sideways on big tech stocks. And if the big blue chips can lead the charge, you can see Dow's up almost 1%. Nasdaq basically just flatlining, like I said, probably just going sideways. S&P's a 0.5% move. You can see they've been dragged up here with the Dow, and the Russell 2000 actually is off an eighth. Probably also too, if that Amazon does top out, keep an eye on that Russell 2000. If that M's out here, bearish market structure. Remember, we did all the M's and W's yesterday, kind of idea. And that's probably a tell that, all right, whatever this dead cap bounce thing was, it's probably exhausted. So I tell you, I still like the idea of hunting a short on this Dow. I risked $20 on that trade, so it wasn't really like huge money. And I don't really, especially on a Monday, I don't want to blow myself up on a Monday. That's just dumb. Um, but here is the 4-hour chart on the Dow. Why would Brian be interested in taking a short shot at this level? We came up against the 30 SMA. You've heard me talk about candle body highs for trade location. We have a pretty well-defined downtrend line that's actually confirmed through market structure. The dead cat bounce rally up into ATR. So at this point, I want to drill down to that lower time frame chart, that 3-minute chart. And as I said, I mean, things were actually setting up pretty nicely. We had a really nice bear div. We had Willie stupidly overbought. So all the pieces were in place, and traders got a trade. So we had a double top come in here, and I just hit the double top, and I was going to risk to new highs. So you can see what happened. I was in the trade for quite a while. If anything, there are a lot of guys that I used to work with in the pit that would just simply say, I'm going to put a stopwatch on this trade. And if it doesn't perform within an hour, I just want to walk away. This might have been a good example of that, because there was actually plenty of anecdotal evidence for this thing to want to break down, to let it break down. I mean, as I had said on that 4-hour chart, we were in pretty good trade location. VWAP was all the way down here. So there was plenty of room for this thing to fall back down, just didn't want to fall. The interesting thing is, there's good old Linda Bradford Radke. If you're a fan of her, I remember I asked her years ago, how many attempts would you take off a level if you liked it? You could argue there's a 3-bar fractal, so a sell level off of that level. There's also this double top with this tail that came all the way down here. Now you can see how the market's trying to reverse off of that support there and working its way back up. So if we rally up here against these highs, then roll over and fail, I could actually justify taking another shot at this thing. Use the VWAP as my target, 2.7 to 1 risk reward. Nothing's happening now, and that would not have fired until we actually go through that low. So we'll keep an eye on it. In fact, you know what? I don't even mind. The good part about trading these micro contracts, this is like the $20. So, I mean, I don't really mind risking $20 on these kind of trades. If it produces 2.7 to 1, that means if you're right and this thing hits, well, then that's what, $60, 55, $60 in your pocket. That's not a terrible number. As it stands right now, you can see they're pressing up against the highs. So this thing would have to fail and roll over for that trade to actually fire. I don't think I'll put the on stop order in while I'm doing the show, but I definitely will put an alert on here. Whoops. I might circle back after we're done all this and revisit that. It's only 9:30 now, so that's basically noon back east. All the fat cats and stuff, they're all out having lunch with their their brokers and stuff. Think of Eddie Murphy at the dinner table with the judge and the Duke brothers, and him asking whether he should go long April wheat. I don't know whether you remember that scene or not, but that's how a lot of business works, in this crazy world. So anyway, let's All right. I'm not quite sure. What else should we talk about here today? In the after party, if I understand correctly, there was a few questions, so we've got some Q&A to do there, AMA kind of stuff as well on Mondays. I do like to review any new signals that were produced, like key reversals and stuff on the breadth indicator, and sort of update you on previous signals like that Tesla and Allen and what's happening here. Um, so we'll get to that afterwards. We talked, we didn't really talk news. We did talk a bit of econs there. Oh, I didn't really get through all of the chart. So, as it stands with the gold, I really don't have anything to do here, and I don't really like the trade location. Uh, Crude was at 13 EMA support here on the 4-hour chart. It's not a bad level to be thinking longs in here. So maybe in the after party, we'll circle back around and spend a little bit more time looking at some of these markets. Gotta find the damn chart. It's not that one. I guess it's over here. So what's our crude look like? So on that 4-hour chart, there is that level. This is why I really like to follow the horizontal support and resistance. Look at that tag and reversal. Also 2 off a trend line and the 30 SMA there on the 4-hour chart. So it probably was something to hunt for there off the 3 minutes. So the question, I guess, is do we have any divergence down below here? Not really, and didn't really get the best bottom to work with here. So I don't think I would have done anything. Might have been a half decent little setup right in there if you were aggressive. Would have preferred to see more signs of dibs, but something like there to there. And reload zone right down in here. Candle body lows for trade location 78.6. So that wasn't a bad level there. And market rallied back to the VWAP. This is by far one of my favorite trades of late, is to hunt sort of extremes. If you can do like standard deviation of VWAP. And of course, we were coming into horizontal support and resistance, moving average support, trend line support, blah, 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 blah. And I think there was a trade set up right there. So go figure. All right, we talked about the stock market. We talked about gold. We talked about oil. I suppose the only thing left to talk a little bit about is good old Bitcoin. I started off the broadcast saying that, yesterday in the video, I didn't really paint a very positive picture. And we talked lots about all these bear divergences, Willie Stupid, RSI threatening to spit out really, really bearish signals. If this thing goes through this 50 line, look out below. So technically speaking, I'm not overly impressed. I will say on the weekly basis, the moving averages are still pointing up. And I think all we really are doing here is just coming back into key support. And then I said yesterday that I kind of think this is some sort of fractal top, like a head and shoulders maybe. So that would mean that we probably really do need to come back down to this really weird low that was put in there back at the end of June when I went on vacation. And then literally that Fink guy just came out of nowhere and the whole damn market just launched higher on nothing really, no fundamentals. We've talked lots about fundamentals in the space. There are some names that are looking very dangerous right now. But interestingly enough, there are other names that actually look pretty attractive. This is a name, just, FYI, throw it in your back burner. Probably easier to see what something looks like this, something like this looks like if we, whoops, what the hell did I do there? If we go and look at say something like Binance, I mean, you can see this thing's come down an awful long way. So nanny nibbles, I wouldn't have a problem with that. You want to try and time your purchases. Nice. Look at this beautiful W right there. Bang. Woohoo. So you can see we sold off. We painted an inside bar. We had a big spike higher and they brought the market right back down against these original bottoms. So keep your eyes peeled. If we get a half decent little W that forms like this, you might have yourself a hell of a trade there. As well, too, I did notice a lot of people on the site talking about this guy here, LPT. So if you had the balls to step in, geez, if you were lucky enough to step in on the low threes, then up in the mid to high sixes, that's a double for you. And our old buddy Eddie, I think he did really well and got himself off a free trade on that guy. But you can see, generally speaking, there's a bit of red on this screen. And I'm a little bit concerned about things like this Huawei and Justin Sun. I heard somewhere that a huge chunk of Huawei's net assets is that Tron token, which is exactly the same thing that happened with Alameda and FTX. And I don't know, I can't remember what the name of the token was, but basically it was like, well, we're a billion-dollar company because this company happens to own our tokens, Alameda, the outside source. But if everybody and their brother selling them, who's going to buy them? And the price of the tokens goes down to nothing, and all of a sudden now the exchange is broke. So just be careful in this space, folks. I've said that repeatedly. Just be careful. We've gone through this seasonally friendly window, and I don't necessarily think that Bitcoin's going off the board, but if I wanted to buy Bitcoins and I was thinking to buy 6 months ahead of the halving event, I would really want to be focusing on things like reload zones down below here. So just be careful here. On the short term, I still think that this is a diamond pattern that's playing itself out. It's nice to see that the market's caught a bit of a bid here against these lows. We did have, actually bullish indications. I've talked to you a little bit about this holiday weekend environment. Sort of, it's a weird quasi holiday. I think the Americans are like, screw it, man. We're business as usual. Right? We're here to trade. Rah, rah, rah. But places like my country, it's kind of a weird holiday here. So I got the impression that we're in kind of a holiday trading type environment. Hopefully we paint some sort of doji here. Maybe couldn't believe somebody actually called this on social media the other day an inverted hammer. Like we actually joke. Oh yeah, that's not a shooting star. That's an inverted hammer. We're joking about it. And then I actually heard somebody call it like in all seriousness with a straight face. Couldn't believe that. So I still think that Bitcoin is range bound in the short term. We're looking at the 4-hour charts and kind of like the futures markets. Candle body lows or trade location. I suppose you could even argue that, this is probably a reload zone. Oh, yeah, look at that. Brian's favorite fib. Candle body lows or trade location. Wicks and tails like to be eaten. So actually, this is pretty cliche. If you could get any kind of bullish turn here, like maybe a nice W or something that could come in here, maybe you get a nice little rally back up top. Only time will tell. We'll see though, lower highs and lower lows. The Bears got the ball, and if we start puking out through these lows, things could get ugly pretty quick here on the corn. So just be forewarned. And we had to, I think I've said to this too before. If you want to use the TRI algo, and you want to sort of stack the odds in your favor. We had one site member a while ago say this, and I have to say it's pretty accurate. He didn't really like taking crypto algo signals unless the S&P 500 is also pointing up at the same time. Considering that these look so opposite right now, I just think, what do they say? Caution is the better part of valor. And that feels like the type of market that we're in right now. All right, happy-go-lucky, rah, rah, rah. PMA for the win, slow and steady wins the race. Let's head on over to the after party, and we'll answer a bunch of those AMA question things that were left over from yesterday, and maybe take a look at some of the signals that have actually come in here, and just do a quick review of anything that maybe catches our attention. All right, have yourselves a great day. PMA for the win. Slow and steady wins the race. Only left Brian says bye for now. Here's another hat tossed for you. Bye.